Scott, welcome, and thanks for playing ball today. Let's start with Boeing shares, which are down 10% in the past week. The company reported those Q2 results showing a huge decline in revenue, fewer deliveries, that new CEO. The shares are down 35% this year. Would you step in and be a buyer here?
I would be a greedy buyer, Kelly, and by that I mean I'm putting bids below the current approximately 168 price. You mentioned the new CEO. I think new leadership is absolutely critical. It means Boeing is turning the page. Importantly, he's a mechanical engineer by training. He's not a finance guy. He's not a marketing guy. That means that Boeing is going to refocus on engineering, design, manufacturing. He's their guy. Maybe most critically, he's announced that he's going to be based in Seattle. And you'll remember that a couple decades ago, the company moved its headquarters from Seattle first to Chicago because they wanted to be closer to international customers, and then to Virginia because they wanted to be close to defense buyers. I think it's just absolutely critical that they're back in Seattle. If there's a problem, and the reason I would be a greedy buyer is because the company has 200 planes parked in various locations waiting for parts for final assembly. That's going to be job one for the new CEO, Kelly Ortberg.
All right. Let's move on to Moderna. Those shares are down 30% or so in the last week. The company reported its Q2 revenue beat estimates and a narrower than expected loss for the period, but it did slash full year guidance. Shares of Moderna down almost 10% today. This one has been struggling. Scott, what do you do with it?
Yeah, this unfortunately is a sell. To many people, they were a hero of the pandemic, but as you pointed out, they just lowered full year guidance by 25%. Losing a ton of money. Europe has announced that they're going to buy less of the COVID vaccine. It's about $86 now, but the price to pay attention to is the price at the start of 2020 before the pandemic was in full bloom, if you will. That price was $19 a share. So if you love what they did during the pandemic, that's great, but you don't have to be along for the ride all the way back down to 20.
So this would be a sell for you?
This is, yeah, Moderna's a sell for me.
Moderna's a sell, okay.
All right, let's see about Micron. Then those shares are down 16% this week. It's down 4 of the past 5 sessions, but still up about 8% on the year. What do you do with this one, Scott?
Micron is a buy. It's fairly priced with a forward PE of just 12.5. Fairly well diversified in their product line. They mostly make memory chips, largely DRAM chips. But those DRAM chips are important in AI in that they're bundled together to create high bandwidth memory applications. There's a little bit of a glut of memory chips right now, but that's easing. That's going to help Micron. The only concern for this company is CapEx. They're going to have to build 3 plants, spend a bunch of money. But I love the fact that they're solidly profitable and relatively well diversified across the chip space.
We have our buy. It's been a tough week. So broaden it out, Scott, over the weekend. What kind of homework are you going to be doing? Are you stepping in here to say this is too much of a growth scare and it's time to get positive on stocks? Or is it time to move to the sidelines or rotate?
Well, there's lots of concern because we have slowing growth and we still have a substantial amount of inflation. I'm old enough to remember when everybody talked about stagflation. That's a concern. One thing that really jumps out at me is that we calculate and publish an index, TDEX, Taildex, which measures the cost of crash protection. And it's jumped more than 100% today alone. It's only done that 6 other times since 2005. So people are finally getting the message that stocks can go down, and they're just desperate to get protection right now.
Where would you, if you were a defensive-minded investor, where would you go?
I would go to consumer staples, particularly the biggest names with the most pricing power, the strongest brands, because they are going to have to not only continue to sell a bunch of stuff during a slowing economy, they're also going to have to do well in the face of inflation. So if you're somebody like Coke and the average cost of the product is $1 and you have pricing power and great brand equity, that's going to do really well in relation to the broad market. Another one would be Procter & Gamble, same sort of setup, wonderful brand equity, relatively low-cost product, and the ability generally to maintain pricing power in the face of inflation. you really would have to have a strong stomach to step into the tech space or AI space right now.
Only quick comment on that, Scott, as I see some of the CPG consumer packaged good companies still retrenching from inflation. They have disinflationary pressures, but the market is speaking. And certainly Coke is cheaper than a bag of chips, to go back to the discussion point we've been having for months now. And then on bond yields, quickly before we go, look at gold's breakout.
Yeah, I think bond yields, they certainly were falling on slower economic growth, but right now much of it is a flight to quality. People are just buying bonds, but they're not worried about the return on their investment, the return of their investment.
Yeah.
So there's a flight to quality right now.
All right.
Very